Billionaire investor Paul Tudor Jones says he is bearish on U.S. stocks and bullish on Bitcoin and gold. Investing legend Paul Tudor Jones has revealed that he's bearish on stocks and bullish on gold and Bitcoin. The two main reasons he cites are the potential for an escalation of the conflict between Israel and Hamas and subpar fiscal conditions in the United States. While inverted yield curve wasn't included in Tudor's comments, it's yet another important factor for investors to consider. In a recent interview with CNBC, Jones mentioned the factors he's keeping an eye on with regard to the Israel-Palestine conflict before deciding that market uncertainty has been reduced, as his general thesis is that if things escalate further, a risk-off sentiment could prevail in financial markets. Despite the potential for geopolitical tensions escalating in the near term, the major U.S. indexes have all posted gains for the first two trading days of this week, if Jones is right. This rally will likely be short-lived. One of the greatest predictors of recession historically has been the yield curve. Every recession since 1955 has been preceded by an inversion of the curve between the yields of the 2-year and 10-year Treasury bonds. In July, the 2-10s yield curve for U.S. Treasuries hit a low of 109.5 basis points. This level had not been seen since 1981. While this inversion has since steepened, things still look bad from the perspective of shorter duration treasuries. The 1-month and 3-month U.S. T-bills are currently yielding close to 5.5%, while the 2-year note is yielding close to 4.96%. The 10-year is yielding 4.65%, meaning the 2-10s curve is inverted by 31 BPS. A flatter yield curve compresses margins for banks because it limits their ability to borrow cash at lower rates while lending at higher rates, which can lead to restricted in their lending activity and result in economic slowdown. It also means that investors are less optimistic about the near-term future of the economy as they sell shorter duration debt, causing yields to rise and being eventually mealed with the country. One country said the C-related Binance freezes Hamas-linked accounts at Israeli request. The Federal Reserve's attempt to fight inflation by raising rates at the fastest pace in modern history has also played a role. Higher rates create additional stress on the main banking system, which has seen 3 of the 4 largest collapses in U.S. history this year, along with the failures of Signature Bank, First Republic Bank, and Silicon Valley Bank. Some market observers speculate that the Fed will have to begin lowering rates as soon as early 2024 to prevent further economic fallout. Even if inflation has not come from down to the Fed's desired level, easier monetary policy and its corresponding liquidity boost tends to be bullish for crypto markets. If rates do fall going into the 2024 Bitcoin halving cycle, the stage could be set for significant market moves. Amidst all this chaos, gold and BTC have remained resilient, and BTC has fallen 2% in the last 2 trading days, being flat over the last 5 days, while gold is up 2% during the same time. Paul Tudor Jones summarized his position on gold and BTC, saying, "We are trying to something that BTC, the billionaire has said on the record that he maintains a 5% allocation to BTC, and he sees gold and BTC as being safe haven bids during uncertain times." Tudor first announced that he made a 1% allocation to BTC in May of 2020 during the COVID pandemic lockdowns. All things considered, Paul Tudor Jones can be right. Time will tell if his bearish call for equities plays out, or if risk-on sentiment somehow prevails. In spite of all recent events,